Hey everybody, let's do a real estate market update for investors and talk about some insights and trends. I'm Tim Herriage. Click below, like, subscribe, rate, review. Let me know what you're doing. All right, so welcome back. Today we're going to dive deep into kind of the real estate market, what's happening in June of 2023, and kind of what the trends and predictions are. So whether you're a seasoned investor or just starting out, this update's designed to help you make informed decisions. So mortgage rates. Now, we're not talking about real estate investor mortgage. Let's talk about homeowner mortgages, because homeowner mortgages, and that's what's important, guys. We've got to really understand the supply and demand aspect. We've seen mortgage rates kind of stick between 6.5 and 7. You know, that's relatively stable. It is high. It's really higher than it's been in the last 20 years, but it's still relatively stable. And now we're really expecting the Federal Reserve, after looking at today's market minutes, to go ahead and go up on their rates in July, which then should drag the 2-year Treasury up, should drag the 5-year Treasury up. It may not drag the 10-year Treasury up, and that's ultimately kind of what 30-year mortgages are priced off of. There's a markup on. So this information is crucial for investors because it impacts your inventory, right? And so many investors right now, they're saying, oh, I just can't buy houses. Oh, I can't find inventory. Well, that's what it is. The entire nation. The entire nation is struggling to find inventory. Homeowners can't find inventory. Home builders can't create enough inventory that's affordable for people to buy, and it goes on and on and on. So in a year where volume's down 20%, of course, your real estate investing business, your volume's going to be down. So we've seen a decline in existing home sales compared to last year, but this decline is kind of stabilizing, right? Like I hate to say we've hit bottom, but we're kind of getting to a stable number where it's about the same every month over month on dollar amount. You know, on the other hand, new home sales are they're blowing up, right? And so that steady rise is indicating, you know, a potential opportunity if you're looking at ground up construction projects, right? Now, what we're seeing though is even though the price of new homes is coming down, the dollar per square foot of new homes are going up because builders are just building smaller houses to make it affordable. So inventory levels and pricing, when you think about that, inventory levels continue to be a challenge in the market. Entry-level properties are particularly scarce. You just can't find anything affordable. The people that live in a $100,000-$200,000 house, they can't sell. What are they going to do? Go get out of their 4% mortgage and go pay 7% for a house? I mean, they're basically have the same payment for less of a house. And so this is restricting inventory. And so when there's less inventory, obviously, even though there's less demand, it feels like there's more demand because there's more demand than inventory. And I hope that makes sense. If it doesn't, comment below, I'll explain it. But the bottom line is less people are selling because they have super low mortgages and they don't want to sell and get rid of their super low mortgage. And even though there's people that want to buy, there's not enough houses for them to buy. So supply and demand, there's more demand than supply. It keeps prices stable, if not going up in a lot of places. You know, but the upper tier market, you know, that's weaker. So if you're above the median home price, you know, really above 110, 120% of the median home price. So if your area houses sell for 300 is the median, I don't really want to be above 350. That's kind of the top end. Personally, I want to be at 250. Those are the properties that we're chasing because there's an overwhelming demand of downsizing, simplifying, move up, move down. It's a really good market. That's 70 to 90% of the median home price. And, you know, you just be aware the upper end houses, the luxury houses are still a little weak in most markets, but it's market by market, right? When you look at investor activity nationwide, you'll see that a significant percentage of homes purchases made by investors and cash buyers are turning into rental properties. There's still a large percentage that are investors buying, but most investors are starting to buy and hold versus fix and flip because gross profits for flippers are kind of at the end of 2022 and the first almost half of 2023 have been really low, and we've had a lot of people upside down in properties. it's starting to stabilize. Gross profits. Flippers are kind of reporting like, hey, we're good. Especially the investors that got in and out of their inventory and didn't hold on to, we'll just say, what was a great buy in March of last year, but was a horrible buy in March of this year. So when you look at rental rates, multifamily rates are up. We're starting to see some single family rates kind of flatline almost. So you just watch out. Last year I started doing a lot of 2-year notes. 2-year leases. Very glad I did that. When you look at, I've got a lot of friends and customers that are saying that they're starting to have eviction issues. They're starting to have to even lower rents in order to retain a tenant, which is normal, right? Like all of this is just getting back to normal, but it's still, it's important to know because, overall the market is presenting opportunities and you just have to make sure that the maths, right? Like you can't just be making it up anymore. You've really got to look at your comps. You've really got to get good at math. So, that's really just a market update. Let me know if you like this. Click down below, hit a like, hit a share, drop me a comment. If you have any questions, I'm happy to answer them. I hope it helps. Personally, I'm still buying. I've sold a couple houses recently because I feel like the cash flow got upside down. The property taxes were too high, the insurance were too high, and the rents had plateaued out. So it was a good time to take profit off the table and then go buy. And my strategy is always to buy up, right? So if I'm getting out of a $200,000 house, that I may want to go do a $600,000 house that I can do a midterm rental or even an Airbnb on, or short-term rental. But that's all I have time today. Don't forget, subscribe to my channel. I'm going to be doing more videos like this. I would love to hear from you. So take care. Hope you enjoy the 4th. We'll see you soon.